Hey everyone, welcome back to my channel Building DeFi Income. Today we're going to be doing a slightly different video from the last few. Before the others have been quite focused on the DEXFi bonds, but today we're going to be doing something a little bit different. It's another protocol by EMP and the DEXFi partnership. This one is called PLAZM. Essentially, I'd say that this is probably my favorite protocol they have because I think it's really, really clever how they've got it set up and how it all works. It's built upon the DEXFi treasury bonds, so I'll explain that shortly, go into a bit more detail there. But basically, it's like a degen protocol. So yeah, really interesting, and I'll get right into that explanation. Okay, so what we've got in front of us right here is the PLAZM protocol, specifically the portfolio page, which outlines all your current positions into the protocol, the total amount that you've got staked in PLAZM, and then the amount of yield earned, and then the total PLAZM that's currently in the protocol. I guess before touching upon that too much, though, I'm going to break down what the basics of the protocol are, why it works, and basically why it's good. So to start off, what is the protocol? What kind of protocol is it? So it is what's called a degen protocol, or built on a degen token. Essentially what that means is it has a fixed supply, meaning no more can be created. And there's also a burn mechanic where the protocol will buy tokens and destroy them, so basically send them to a dead wallet, basically meaning the supply will always be decreasing. In terms of how you actually earn the PLAZM tokens through the protocol, it's essentially through different interactions which will earn you shares of the reward pool that is each day. And you essentially, depending how many shares you have, which is determined by how much PLAZM you've got in, whether that be through staking or creating, more on that in a little bit. Essentially, yeah, you'll get your share of the daily reward pool, and then that's how much you earn a day. And then the more you earn, obviously the more you could then reinvest in later, and then sort of just compound that process. Crucially, which is one of the things they do to sort of do this like degen thing, is the amount of PLAZM that's in the reward pool each day goes down by 0.08%. So essentially, each day there is less PLAZM being available for rewards, and that doesn't mean that you as an individual earn 0.08% less a day, because maybe your shares are higher comparatively, because shares are basically decided by the total amount of investment. So if loads of people have their positions end and don't reinvest, then your shares could double, and therefore, yes, there's a less total reward supply, but your share of that could be higher. I guess a little bit more on that shortly. But crucially, going back to that buy and burn, because of how the buy and burn works, the price of PLAZM theoretically is guaranteed to go up, as eventually the buy and burn amount will overtake the amount of tokens being released in the rewards pool each day. And once that happens, there's something called a convergence. So you've got at the moment, the current rewards each day are here, and the current, I guess, buy and burn is here. Once that takes over, there'll be a convergence. Once that convergence hits, there'll be more buying pressure than sell pressure, at least from each day of the protocol. And therefore, the price of the token will go up. Now, for anyone who's got experience in other degen protocols, might be thinking, well, how do we know that the buy and burn pressure is going to go up each day? Normally, how protocols work is when people essentially interact with these degen protocols, they have to pay a fee or a contribution, depending how you want to call it, and essentially that is then used to put into the buy and burn. It buys the token and then sends it to the dead wallet. Now, PLAZM, the protocol, is a little bit different. Rather than using any deposits, in this case it was in ETH on Base, the same as the rest of their projects. In this case, rather than using the deposits from the users to buy and burn, what they did instead was use the bonds. So this here is the current value of the amount, the PLAZM's portfolio into bonds, essentially. So the PLAZM protocol has $480,000 worth of DEXFi treasury bonds. earning yield every day. And it's then the yield which is then used to buy and burn the token. And therefore there's constant buying pressure every day, and it's obviously relative to what the yield on bonds is currently. So right now APR is quite good, so therefore the buy and burn is quite strong. If we saw APR drop back down, then yes, the amount of yield burning tokens each day would be lower. But currently, as the APR is up and hopefully will continue to be up, then it means the buy and burn is that bit stronger. And as the yield is strong in the buy and burn and the release pools are getting less, that's how we have that convergence where at some point the amount of tokens being released in rewards will be less, so it will go down to less than the amount that the buy and burn has to buy tokens off the market and burn them. Obviously, that convergence, so to speak, could come earlier if those that are invested into the protocol and get the rewards choose not to sell them. But the difference is they could still sell them. Whereas with the buy and burn, those tokens are gone forever. They can't be achieved back. No one can go and get them again. And yeah, so this is how essentially the buy and burn works. And then you might also see a couple of other things here. Actually, first, let's just go to stats. I think this will show you what's really, really good. So here we go. So at the moment, 3.97 million PLAZM has been burned already, which is 21% of the current circulating supply. Current circulating supply being 15.19 million. The total possible supply of the protocol, which is set up to work for 20 years, is 125 million. Obviously, because of this buy and burn feature, will there ever be 125 million in circulation? No, unless bonds stop and therefore the buy and burn stops, which essentially, as we've said in other videos, for bonds to stop, it would kind of almost need crypto to stop entirely for the earnings to be zero. So will we ever get that 125 million supply? No, because we've already got nearly 4 million gone, and that's with only just over 15 million current circulating supply. So by the time we get to 50 million current circulating supply, if we can even just maintain that level of burn, then, you know, that's a big difference. And you're looking at 20 million burned already. So we're never going to have 125 million in circulation. I know from some comments that AJ, the founder, has made, he believes that 60 million is probably what the circulating supply will end up being. So to have a 1% stake, obviously it's all relative, that's not a guarantee, but to have a rough 1% stake in the protocol, you would need 600,000 PLAZM tokens, which I think is really quite interesting, to be fair. So yeah, that's really quite clever. Obviously, I guess for anyone who doesn't know about the bonds, if I just quickly should be able to, let me find it. They do always have it attached to the protocols where you should be able to view. Here we go. So you can view the bonds on DBank. So this isn't the total PLAZM supply, but rather, or the PLAZM portion of it, but this is just the total DexFi treasury bonds. So as you can see, currently there is 2.6 million in the DexFi treasury bonds. And these are obviously all the different vaults that they're invested in, DexFi vaults, which they're earning LP or liquidity providing fees on if the full term. And these fees are essentially what the income is earned through. So of the total 2.6 million, PLAZM has a $480,000 stake of that, which is at rough math, I think around 10 to 15%. Let's just I'll just do it quickly on a calculator now just to check that. So if we did 480,000, I think it was just over that, but roughly, and then said 2,640, so 2,640,000. That's, yeah, so that is actually at 18% stake. So of all that total yield generated each day, 18% of that is actually the PLAZM protocol, which I think is really quite cool, personally. But yeah, so that's just the very basics of what the DexFi bonds work. What I'll do is link it to other videos I've done previously if you want a bit more in-depth on that. So I'll pop that in the description. and it should flash up on the screen as well just now. Essentially, you can go check it out if you're interested to know more before getting into Plasm, or instead of, or just to learn a bit more about how the protocols work. I think it's really good to have that sort of understanding, I guess. So yeah. But anyway, back to, I guess, just a general principle of the buy and burn. So yeah, because of how it's set up, it is mathematically and economically, and this isn't financial advice, but it's mathematically and economically guaranteed, theoretically, to go up in price. So eventually, Plasm will have to go up more than it is. Currently, it is now at 2 cents a token, which, whilst less from when I first got invested, is significantly higher than it has been even just 2 weeks ago. It's doubled now in that time, pretty much. So that's really good to see. It's in this period of having higher yield. So that's really bullish as the term goes. So hopefully we'll continue to see that, certainly as the yield continues and as the reward pool gets smaller and smaller. Even if the yield stayed as it is, but the reward pool got smaller and smaller, eventually the yield would overtake it. Obviously, if the yield also went down because of the bear market, and let's say there was less transactions going on each day for the bonds to earn off of, then yes, it would take a little bit longer. But even at the reduced levels, it's still guaranteed. And you've also got to remember that the price of the Plasm token, so right now it being 2 cents, is great because it's now worth double what it was before. But it does actually mean that for the buy and burn to buy and burn that token, it's got to spend double than when it was 1 cent. So if yield is really low, or yield is lower in bonds because of the bear market and there's less daily transactions going on, it probably also means that the price of Plasm is likely to be lower too, and therefore the buy and burn will still be working really well. I think that's why we've seen this spike, is because the buy and burn suddenly earned more when the token's worth only 1 cent, and it's been buying and burning regularly, which has therefore led to the price going up because there's been that constant buying pressure which drives up the price. So that's just, I guess, the fundamentals of how the buy and burn works. Now, what you might notice, though, is so this currently is what the protocol's earning in a day, so that's $811. However, it isn't all going into the buy and burn. There's also 2 other things. So from a YouTube live stream that the founder did a few months back, he essentially did a breakdown of the new setup they'd had for the buy and burn and yield split. So I'll just read that to you now to give you guys an idea. So 60% of the protocol goes into this buy and burn here. The split between USDC and eShare there. It does say 20% on the site, but I believe it is 60%, as that is what he said in the video a couple of months ago. And as far as I know, that is the most up-to-date information there is. But I will look into that. If that's any different, I'll pop it on the screen now with the correction. But I believe 60% goes into buying and burning, essentially. 10% then goes into buy and build. Now, what we mean by that is this is the portion that goes into building liquidity. So essentially, because we have active liquidity because of the buy and burn through that constant, that constant buying pressure that comes with it, this isn't so big. But essentially, what we do with this is we buy Plasm, or the protocol buys Plasm, and then puts that into like different LPs, and therefore they can then, users can sell and buy Plasm more easily because there'll be that constant amount of Plasm in liquidity pools. And it's also there obviously to be then bought by the buy and burn. So it just sort of helps that. It doesn't rely on users putting it into LPs. That can do it. So you can buy and burn from there, or just trade yourself if you want to trade for more. So that's what's, I guess, attractive about that option. And then the buy and grow, which is this is a newer thing, but this is really great, and this is what's really helped the yield and the bonds get better and better, is that 20% of the yield is basically compounded back into the bonds. So each day, they take 20% of the earnings and compound that back in, which is $162. So essentially each day, the protocol is buying nearly another 5 bonds, but really that'll be 4, and then it'll carry over to the next day and be 5 currently. But essentially 4/5 bonds a day are being bought by the protocol. And that's obviously gradually increasing the yield that you get, because the shares of the yield that you get through bonds. So that's really quite bullish. So even if no new users come in or no one restakes, meaning there's no new deposits coming in essentially to build that initial treasury, which is what earns the yield through DeFi bonds, actually it will always be increasing just based on this compound feature. So over time, it will keep compounding, and that even if the price of Ethereum stayed the same and therefore the price of the bond stayed the same, even if no new users come in, eventually that will still reach, double what it is now. So nearly 1 million or 1 million even, it will get there. Obviously in a bull run where the price of Ethereum could double or more, then the value of the treasury here will double or more. The yield therefore could be substantially higher, and that's where we could see some real buy and burn action into PLAZM. But yeah, I just wanted to touch upon that a bit. So I guess to summarize, 20% is compounded back in. It looks like we're saying, actually, it might be a different split now based on the website. Perhaps the information he was saying for was slightly different. So 20% is basically into buying PLAZM with eShare, and the other 20% is to buy PLAZM with USDC. Essentially, to eShare and PLAZM is that swap essentially. So that's one of the liquidity providing pools. So there'll be a swap between the two, and essentially just provides that liquidity. So disregard what I said earlier. It is now based on the protocol, so this must be up to date. It's 20% is going into providing, I guess, more liquidity between PLAZM and eShare, and another 20% between PLAZM and USDC. And then the buy and burn itself is using eShare to buy PLAZM, which again is good for both eShare and PLAZM. It increases the price of PLAZM, but also creates more utility on eShare and therefore drives the price of it, as the buy and burn needs to be buying eShare off the market. So it creates buying pressure on eShare too, which is another token of the EMP network. So that's actually quite bullish. And then the other is basically creating that pair between PLAZM and USDC again, but actually that's burning, so buying PLAZM with USDC. So my mistake before, apologies for that. It isn't 60% anymore. They've obviously must have changed that. Perhaps when we hit the real lows of the market and the yield wasn't so high in the buy and burn. So we've got 40% buy and burn, 40% buy and build for that liquidity, because when it's in liquidity pools, it's still taken off the market somewhat. It's, it can't just constantly be dumped and sold. It's held there essentially. And then obviously 20% in the buy and grow. Okay, so that I think is the key fundamentals of the protocol. Just want to check if there's anything that I've missed there. It doesn't look like it, so essentially what I'll just cover now is how do you actually earn with the protocol, what do we need to do, and then I guess finally, just touch upon that. Oh, actually no, before I do that, if we go to the stats here, so obviously we've already shown you that before, in terms of we can sort how much of the total supply is being burned, which is 21%. So 10% is in those liquidity pools I spoke about. So obviously 10% being in there means that's 10% that can't be bought and sold, or 20% or 10% that can't just be dumped by users or sold by those that don't quite understand the protocol. Another 7% is staked, so that is by us, the users, staking to PLAZM. That does include the team as well. It isn't just those. So that's if they've got anything reinvested, that will include that too. There's a 62% liquid supply of PLAZM. So essentially that means that is the bulk of it, and that's where the buy and burn will be taking it from each day. And obviously the total supply being 15.19 million. And each day that number will go up. And in terms of the total supply that it'll show will go up. What you'll notice is obviously we've got 15.19 there, but 11.86. So if we get a calculator out and add that up, so if you do 11.86 plus 1.91 plus 1.42, so what you'll notice is, yes, that's the total circulating supply of PLAZM. That's excluding what's already been burned, and that's 21%. 21%'s gone, will never come back. And that, only increase over time, maybe not percentage initially, but certainly in number. And as the rewards go down, obviously at that point, then that burn percentage is going to go higher. Assuming the yield stays stable at a higher level, or even if it goes to a lower level, it will still ultimately mean more will be burned over time as the less and less is getting released. But I think that's really quite bullish. And this shares here essentially refers to the shares that the users has of the reward pool. I'll touch upon that in just a second, but I guess just to give you a general insight. And currently, this is how much PLAZM are in the payout for day 243. So at the end of this day, 82,396 PLAZM tokens will be released to the users that are currently active in the protocol based on their shares. And that is now worth, because of the current price of PLAZM, that's $1,730 worth of PLAZM, basically. So compared to the buy and burn we just saw now, which is obviously 800 a day, and the 40% that's in the buy, so that being like I think 300. Does it say what it is daily? Okay, so it's 486 of daily yield. That's a bit higher than that suggested. Perhaps it is now 60%. Let's just do a check of that. Let's do some numbers. So what is 496 divided by 811? Okay, so it is 60% actually. So ignores what these are here. I was right in what I initially was saying in that I think 60% in the buy and burn now. The buy and build and e-share liquidity. So this is e-share liquidity. That's at 10% now. And the USDC one, so buying PLAZM like to USDC for the buy and build, that's 10% right now. Building that, that portion of building that liquidity between PLAZM there, as we sort of said earlier, and the grow is 20%. So that probably should be updated actually then, because that would mean that that's incorrect. So it's slightly confusing. So I'm sure the team are on updating that, but that would mean then buy and burn 60%, which does ring true when we looked at that number and did the maths there. So that's actually even better. There's more being buy and bought off the market. 20% to build liquidity and 20% to grow the yield. So that makes a lot more sense. And it also makes sense why that liquidity in the LP is only 10%. So yeah, that makes much more sense to me now, why that's like that. But anyway, sorry, sort of sidetracked. Glad to clarify that though. So yeah, definitely good to have pulled that. I might drop a note earlier in the video too, but I think good that we've realized that now. But yeah, I am, this is all just my understanding of the protocol. So here and there might be some things where actually mid-video I realize, oh, actually that's a bit different from what I've just said. But I'll always make sure to correct myself if I say anything that's wrong, just to make sure you guys have got the most accurate information possible. But yeah, I'm sure the team are on that, but that might be something I'll just drop them a message to remind them of, or ask if that will be updated, just to clarify. So if I hear any differently, I will update in the video, but I think we can say, based on at least using the maths there, 60% buy and burn, 20% buy and build, 20% buy and grow. But yeah, so what I was saying is, so we've got $486 worth basically in the buy and burn. So before, when PLAZM was worth 1 cent, rather than being effectively $1,730 worth of PLAZM each day, it only would have been, I think it's at like 875, 865, I think, roughly something like that, $865 worth of PLAZM each day. I think just slightly above that, 866.5, I think. But yeah, so essentially that would mean that the yield would have been already, over half of what the daily rewards were. Bearing in mind they're going down each day, it wouldn't have taken that long for it to catch up. Now, because it's going to cost more to buy and burn a token, which is just a sign that the buy and burn is doing what it's supposed to do. Obviously, it will take a bit longer for that convergence to hit, but that's not a bad thing, because the total PLAZM distributed each day is always going to go down anyway. And if, because we're nearing that convergence a bit more, it keeps driving the price up before we even hit the convergence. Just imagine what will happen when we do. So right now it's at 2%. Once we hit convergence, are we going to see 10 cents? Quite possibly, and then over time it could go up more and more. I know that the owners, the founders, AJ has said that he could easily see PLAZM being $1. He did say it by autumn. Whether or not that will be the case, I don't know. But just based on the pure economics of the protocol, I think it's very possible that PLAZM would hit $1. So therefore, that's really bullish. If you have 5,000 PLAZM tokens, which is very achievable to get, by the way, then that could be $5,000 on that basis. So if you have more than that, then that starts looking really nice. Now, obviously, there's no guarantee on that. It could not hit that at all. But based on economics wise, it's fairly likely that it will eventually. How long that'll take, it could be years, who knows, but I think that's still quite bullish and quite exciting, which is why I really like the protocol. It's so clever. I've not seen one that's quite as clever as this before. But yes, I think now I'm going to go through basically the portfolio page, explain what it means, then how you sort of stake and earn, and I think that'll pretty much wrap up. Maybe just touch upon the referrals too. So essentially here, what we've got is my total position. So this is active ones. So these are all the ones that I've got that are currently live. And as you can see, these are all stakes. And of what I've staked here, I have then earned this much PLAZM on top of my stake, meaning my total PLAZM is currently 3,000. Now I did just do a big load of staking yesterday at 860 PLAZM, sorry. So that's why my staked amount is significantly less than my, well, not significantly, but my staked amount is more than my yield earned. But before I'd done that, I think I had, say, 900 and something staked, roughly, maybe a bit less, 800 and something, I think. And as you can see, the yields are 1,290 PLAZM tokens in that time. So actually, I had before earned more PLAZM than I was staked in. So it won't take that long to do that. Now, what you are going to see at the moment is obviously, so the cost so far to stake that amount is $163, and I only have $63 worth of PLAZM total, so including the stake and earned. So you could say, oh, well, that's in a negative, that's a negative ROI, and if you look at the ROI here, you'd be correct, they all are. But what you can also see is that there's a long time left in these stakes, and I'm earning on this each day. So of the 20 PLAZM I put in, I've already, and that was, I don't think it shows when this one was. So if I go to the earn section, this will actually show me how long it's been in. So there's 77 day stakes. Essentially, that means there are 5 staking periods a year, or you could do 5 stakes across a year period, assuming you go, say, oh, that's ended, next one in. So yeah, so that's why. So ROI is only over 77 days, by the way. It's not over a year like with bonds. So that's quite bullish. But what you'll see here is, so I'm just under half the time period in. Currently, yes, it is 32% down, but there's 41 days left, and that's 41 days that this particular share is going to keep earning me more and more PLAZM. So by the end, I would expect, assuming the share rates stay the same, and in fact, I think they've gone up because there's less reinvesting right now, just due to, I guess, the economy, or maybe the fact that crypto is a bit lower at the moment. So maybe people have got less fresh ETH, and fresh ETH is much more profitable. I'll explain that in a minute. But yeah, so that's really quite bullish. So 20 PLAZM should at least get me 80 PLAZM, I would expect, if not more, maybe pushing towards 100 or more, depending on that share rate, like I said. So obviously at that point, the ROI will be in the positive. So it's always going to be negative first. So it's not like the bonds where it could look positive at the beginning. PLAZM tokens will always look negative. I can show you some ended stakes. No, I can't, because I switched wallets over to this one to keep it nice and neat. Basically to make sure that I've got some of my investments in one wallet and some in the other. So I can show you that in a bit, perhaps another time. But yeah, so essentially this ROI is already at 32%. It would have started at 76 minus 76% like this one is here. So the fact that we're already at minus 32% means I think we're going to be pretty good for getting into the positive, particularly if the price of Plasm keeps going up. So hopefully that's something we'll see. But yeah, I guess that's everything as part of the portfolio. Other than you'll see this that says percentage ownership here, or based on your total Plasm. So essentially, your percentage ownership is the share you get of the Plasm rewards. So each day I'm getting therefore 0.1369% of the total rewards a day. I think that roughly means I'm getting a couple of hundred Plasm a day. Couldn't swear that that's the number. I mean, we could literally do the math right now. So if we said total number therefore is, what's that? So that's 1730 times by 0.13. We'll just call it 0.13% for ease. Yeah, that's 224 tokens a day. So on that basis, I believe it is calculated, at least that's what the ownership is given a percentage in. It's calculated on this ownership number here, I believe. So I should be therefore getting 225 Plasm a day because I have 10 million shares out of 7,493,000. No, 7,493,640,000 shares that there are. So of the total thing, obviously, the ownership I have of currently staked is not particularly high. But if I'm getting a couple of hundred tokens a day, that's huge. That's going to be quite a big return over time. And I can track that. I can check what that is tomorrow to give a starting point. But I think that's really bullish. So that's what it means by ownership. So when you go to stake, so essentially there's two ways of earning. I guess to explain, so there's creating, which it isn't creating new tokens, but basically you would deposit an ETH amount, and then it would, rather than having to buy or already own a Plasm token and then stake it in, this would be a way of starting off fresh with 0 tokens. But right now, you would actually be at minus 87.7% ROI. Creating is really profitable when the price of Plasm is high. So when we started, and Plasm was, I think, over $3 when I started. So yes, it has come down a lot, but it did start before the bear market. So that's largely responsible for that drop off. And obviously it is now recovering from the floor price of just under 1 cent. And I think also a lot of people didn't quite understand the protocol. Like from when it started, people said to really be a winner, you need to be in it for multiple cycles. So multiple of those 77 day cycles I mentioned. Some people thought it was get rich quick. Obviously it's not. So if you thought it was get rich quick, you're probably quite disappointed now. Because yeah, it isn't. So that's why the price has gone down, because people they didn't understand it when they started. So then dumped the coins, or dumped what they owned because they weren't happy about that, which therefore drove the price down. But we're seeing that recovery now, so I think those that currently hold Plasm are understanding it much better. And hopefully any of you guys that come into it, if you're not already, you'll appreciate the pure economics and cleverness behind it too, and that it is multiple cycles that's really going to make you a winner. Obviously, you could be a winner, assuming the price stays up or stays the same as when you invest. Then by the end you would be in positive. If you look at the staking, it's currently at 94.7%, it looks like. That's not exactly how much balance is in my wallet. I don't know why that number's there. But yeah, if you were to stake just 500 Plasm, you get a 94.5% return. So yes, you would be profitable. Assuming the price stays as it is now. If it dropped again, then you might still be profitable, but not as much. But if you're in it for multiple cycles, then that's really when you feel the effect. Because right now, if you had 500 Plasm to stake, by the end of it, you'd have 4.2k, also 4,200 Plasm. But then you've got 4,200 Plasm to stake, and therefore you don't have, if you can stake all of that, you've then got 35,000 Plasm, and then it really can compound. Now that is reliant on you having fresh ETH, so I guess I'll explain. The other way would be to do it through staking, so that's having the token and then buying it. If you don't have Plasm, Easy mode is probably going to be the easiest way for you to do this, because what you can do, you can use easy mode to stake your Plasm, but you could always stake with ETH instead. Therefore, it would buy the ETH, the Plasm for you using your ETH deposit, whilst also taking that staking fee that I mentioned. The same could also be done with USDC or eShare, whichever one you've got. I think ETH is probably the best for buying bonds, but then doing an eShare is great for adding to liquidity of the eShare of the protocol. So both would be good, really. But the main way that's profitable right now is staking. So that, as I said, is having an X amount of tokens. So in my wallet, there's 786, for example. So if I was to stake all of that, I think numbers-wise, it would probably cost around $50 worth of Ethereum. Essentially, they call it a fee, but what that fee is really more like a contribution, because you ultimately benefit for it. So that contribution goes straight to the treasury to buy more bonds, and therefore earn more yield. So that is not okay. That's done 72 Plasm. I don't know why, given there's 786 in the wallet. Sometimes it can be a little buggy, so I guess just to be aware of. But yeah, so essentially that's what that fee that I mentioned is for, is essentially to build. Okay, it's not letting me do the max, so you could just put in whatever. Let's just say I wanted to stake 500 Plasm, round figure, currently costing me $40. I would then expect, assuming the current share rate stay the same, so up to 2.96 million shares that'll get me, I'll then get 4,180 Plasm back, which at current prices would be almost, in fact, is that more than double? More than double the dollar value. So 94.4% ROI in 77 days, looking very likely based on that. So that's really quite bullish. But that's what the fees are. So that will always go to the treasury, and that's the same for if you create or stake. It will go to the treasury to buy more bonds, more yield, more buy and burn, liquidity, the rest of it. But buy and burn probably being the most crucial. So that's what that staking fee is. That's why it costs to stake Plasm. Now, one thing that happens is people might get this 4,000 Plasm. But obviously, if you've got 4,000 instead of 500, it isn't going to cost you $40 to restake. It would actually cost you $300, and you might not have that fresh capital to do that. So you obviously, what in some protocols it could be where you can't stake again. You just have to basically hold your Plasm and wait for the buy and burn to do its job and the price to go up before you can take profit. Now, where Plasm's really clever is there is also easy mode. So what you can do, and I'll show you here. So let's say we're doing that 4,000 Plasm, sure, because that's what we looked at. It was $330. So easy mode will take a very, very slight extra bit of cut for the protocol than if you stake it, because the easy mode's doing the thinking for you. So if creating was more profitable, easy mode would automatically do that for you. If staking is more profitable like it is now, easy mode will automatically do that. Just waiting for this to load at the moment, so hopefully it'll get there in a second. But essentially, there we go, perfect. So yeah, it'll cost. So see, yeah, it'll be $320, but that's because you're getting a slightly less return, just based on the fact that it's basically 1% less, because it's going to take a little bit of that fee for the protocol to put straight into the treasury, because easy mode's done the thinking for you essentially. Now, however, what else is really clever, and when it loads, I'm going to go ahead and do it. Let's see if it'll let me do it now. Not yet, so I've got to wait for it to recalculate. It will constantly refresh for you. In fact, it won't let me do that on 4,000 Plasm because I haven't got that much. So I'm going to do it for 500, but as we saw, let's compare to 500. So yeah, 500 will cost me $40 to restake for easy mode. So that's slightly more than if you just did a regular stake, if you noticed. So yeah, so let's remember $40 that would cost. Now, what I can do through easy mode, you can actually just compound all of your Plasm in. And by that I mean it doesn't require fresh ETH, because what the protocol can do is sell your Plasm for you to cover the, if you like, staking deposit fee / contribution, and then the platform contribution, which essentially is what you get for using easy mode. So I could use Ethereum, for instance. He says when it loads, there we go. I could use Ethereum, and therefore that would be that $40 worth of ETH that we saw earlier. But I could use PLAZM instead and stake that and compound it. So therefore, it would essentially sell 395 PLAZM for the staking deposit and then 2.5 for the contribution. And therefore, I would essentially have staked 101 PLAZM, and that's what I'd earn on. So over a period of days, motorbike, sorry. Yeah, so of that period of 77 days, right now it wouldn't show you what that ROI would be. So what I do is say, okay, so that's the number there. So let's copy that 101, pop that here, and this is what you'd actually earn. Obviously, with compounding the PLAZM and using, basically selling your PLAZM through easy mode to cover that deposit fee, it's not costing you anything. So anything extra over 500 PLAZM that you get, totally free for you. Didn't cost anything. So that's quite bullish, as there's a way to still benefit, even though it's not actually costing you anything. So there you go. So 500 would turn into 850. So I still think that's really quite bullish. Yes, the ROI is lower. So because obviously you're not going to earn anywhere near as much because you're selling most of your PLAZM to cover the stake, but you've still got, in this case, 350 more PLAZM at current rates of shares than you would have had if you just held. Plus, this way, obviously you could look at them and say, but therefore you're selling PLAZM, which has to sell pressure and would drive the price down a bit, which is technically true. Yes, it does, but at least the earnings from that are going straight into the treasury to buy and burn that bit higher. So if people are going to, rather than just holding, easy mode is still more beneficial for the user as long as the ROI is high enough. I think AJ said that the ROI needs to be at least 30% for easy mode to be profitable. If it's showing it's less than that, don't do it. You'll just essentially lose money. But obviously at 94.4%, it's definitely profitable, given that you'll be getting an extra 350 tokens, which is nearly an extra 50%. In fact, no, it's more than that. It is an extra 60%, I think that is. Roughly, because that would be what the ROI would be. So we can calculate that. So if we had 350 divided by 500, what is that? 70%. So a 94.4% ROI actually would be like 70% if you use easy mode, which is still really good. But this way, yeah, as I was saying, rather than people just holding, which is fine because you're not selling, so it's still good for the protocol that way. Obviously, selling is, I'm going to say, the worst thing. It's not, because if you sell, it actually drives the price down, which lets the buy and burn work better and better. So in the lower prices, the buy and burn is even more effective. So low prices in some sense are actually bullish because more and more tokens are going to get burnt. But obviously, theoretically, selling the token is worse for the token value, is what we'll say. Not for the protocol, because the protocol is built to thrive either way. But it will be worse for the price of PLAZM. Easy mode will cause a drop, but it will actually, if you stake and use easy mode to sell your PLAZM to cover the contribution cost, still get in staking. But at least that is then going back into the protocol, into the treasury. So easy mode / just purely holding are probably fairly comparable. / easy mode might actually still be better for the protocol, because ultimately there's still more yield or more total treasury value that it's got to generate more yield and therefore fuel the buy and burn more. So in the long term, it probably is still better for the price of PLAZM the protocol to use easy mode than nothing at all. But ultimately, the absolute best for the user, so for me, for you, and the protocol, would be to just go straight in fresh ETH if you can. Doesn't have to be huge amounts. I'm obviously not doing huge amounts, same as you've seen my DexFi bonds. They're not huge amounts, it's just that steady building. So I think I've been doing roughly 800 PLAZM a month. 860 was last month, and yeah, so 800 PLAZM is about $64 that costs to restake. That's fine. That's an amount that's affordable for me. If a bit more was affordable for you, brilliant. You could do a bit more. Or if a bit less was affordable, then that's absolutely fine. Anyone can earn rewards on it. It isn't just the whales game. Obviously, yes, the whales will earn more at once, but it's still proportionate. They've got the same return on investment that we would get, just they'd have more to put in at the start, and ultimately that helps the treasury more, helps get more yield. So it makes sense that they're rewarded a higher amount for that. But you don't have to be a whale to benefit too. If you can keep compounding like 800 a month, which could therefore be earning you, you keep doing that at the end of each 77-day stake, which you keep doing. So it's called laddering, basically. When you do it that way, you do a bit at a time. Well, if that is earning 6,000 PLAZM each time, then yeah, that's brilliant. Effectively, each month's worth of staking, so each 800, which is $65 a month, let's say for ease, will earn you 6.7k worth of PLAZM each month. Obviously not really a month, it'll be the end of 77 days, but effectively at current rates, obviously that will fluctuate depending how many people invest in. If more invest in, your shares will be a bit diluted, so the ROI could be less, but equally if less people stake because they haven't got any more fresh ETH to put into it or just don't want to right now, then even better, that'll go higher. So it could all fluctuate, but this is just on the current predictions. But I think that's really quite bullish if you could do that, because you could quite feasibly get at 800 a month 50,000 PLAZM across a year, if not more realistically, if you could keep maintaining that. But yeah, so this is why this is my favorite protocol. I think it's really, really clever and it's got the biggest upside potential. I guess just to touch upon that laddering I mentioned, there is arguments that if you do a big stake all at once, your return on investment could be slightly lower and it could cost you a bit more. So if you did 200 at a time across, say, just each day or each week even, rather than 800 all at once, there are some arguments that laddering is actually better. Whether or not that's the case, I mean, I guess it must be mathematically because then if there's any drops in price, therefore it might cost a little bit less to restake and you then get the benefit of that. So yes, laddering probably is the way to go. So I know that's what I try to do usually. So I might do 200 in one day, 200 the next day, 200 the next day, and then 200 the day after that. You could delay weekly, but I usually don't tend to. Just personal preference. I'd like to have the stakes ending around a similar-ish bit of time, and then actually use some of my yield from my bonds to keep doing smaller restakes each week. So usually every 4 to 5 days I'll do another stake. Obviously much smaller. You could be literally talking like 50 PLAZM, depending on the cost of it. Let's see, so 50 PLAZM. Yeah, that costs $4, which is basically, I think, what my bonds make a day. So yeah, over 4 or 5 days, I might do another 50. So not huge, but if you're doing that, I don't know, what's that, 6 times a month, then that's still another 300 PLAZM on top of the initial like 800. So yeah, I think that's really quite good. But obviously, that's an option that's totally up to you guys. I am aware this is a really, really long video now, so probably going to cut it short there. Hopefully it covers everything. I'll be sure to leave, this will have lots of timestamps in the video, so it should be really easy to follow, like the key bits here and there. But yeah, I've really enjoyed doing this because, like I said, it is my favorite protocol, so hopefully it's interesting for you guys too. Actually, one more thing, referrals. So as you can see on the portfolio, it did say that so this is a second one I have, which has been referred by the main one. That was both to just set my investments across so they're not all on one wallet, as that's something that could be sensible to do. But it was also to test the referral so I could tell you guys about it. So essentially, my other wallet will earn fees on the total amount of deposits that I've got. It won't be very high, it's only 2% of that. I can include a snapshot of that just on the screen so you guys can see what that is currently. But there is a referrals. It's not like the bonds in terms of its passive income, but it's a bit of something that's quite nice that you can either, if you need to do a second wallet, could take advantage of it, or more likely probably just if you give it to friends. I more just tested it to see how effective this is, and you know it does work. You do get that extra Ethereum. But I guess just to explain, you might have noticed what that is, and yeah, so that's my main wallet. This was just one I've got for Plasm, basically. But yeah, quite interesting, really. But yes, anyway, I hope you've enjoyed the video. I've really enjoyed making it. If there are any questions following this, please let me know. But yeah, thanks so much for your time and watching. I hope you have a lovely rest of your day.